This is Market Lens for Friday, June 26, 2026. Today's market map is sharply divided. Japan equities and real estate still show the strongest setups. Metals are trying to stabilize, and crypto remains the weakest area on the board. Under the surface, technology volatility, China-linked pressure, and oversold risk assets are creating a market where opportunity and fragility are sitting side by side. Across today's ranking, Japan equities lead with an opportunity score of 2.3, followed by real estate at 2.0. Metals, Hong Kong, and emerging markets sit closer to neutral, while US equities are pressured by high volatility in technology. China equities and crypto remain the main risk zones, with crypto at -2.7, the weakest reading in today's market lens. Japan equities remain the strongest area in today's market lens, with an uptrend, normal volatility, and an opportunity score of 2.3. EWJ is still above both its 50-day and 200-day moving averages, which keeps the broader trend constructive despite a weak 5-day move. The main tailwind is continued investor interest in Japan's AI, semiconductor, and technology supply chain exposure. The key risk is that global semiconductor weakness and yen volatility can pressure the same areas that have been leading the market. Bottom line, Japan still looks constructive, but short-term momentum has cooled. Real estate has one of the cleaner setups today, with an uptrend, normal volatility, and an opportunity score of 2.0. VNQ is above both major moving averages and is positive over the past 5 trading days, which makes it stand out against weaker risk assets. The supportive backdrop is tied to softer yields and the relative appeal of income-oriented real estate securities. The main risk is still interest rate sensitivity. If inflation pressure returns or yields rise again, the sector can quickly lose support. Bottom line, real estate is steady, but still highly rate-dependent. Metals are sideways with mixed volatility and an opportunity score of 1.0. Gold and silver both posted positive one-day moves, suggesting some near-term stabilization, but both remain below their 50-day and 200-day moving averages. Gold is oversold with elevated volatility, while silver is very oversold with high volatility, making the internal picture uneven. A softer dollar or lower real yields could help precious metals, but higher for longer rate expectations remain a major headwind. Bottom line, metals are trying to rebound, but the setup is still tactical and choppy. Hong Kong equities are sideways, with normal volatility and an opportunity score of 0.5. The setup is more orderly than some higher-risk areas, but EWH is still below both its 50-day and 200-day moving averages and remains oversold. That leaves room for a relief rally if China sentiment improves, but the larger picture lacks conviction. Policy uncertainty, currency pressure, and weak China-linked investor sentiment remain the biggest obstacles. Bottom line, Hong Kong equities are not breaking down violently, but they have not rebuilt a strong trend either. Emerging markets are sideways with normal volatility and an opportunity score of 0.0. VWO is close to its 50-day moving average and still above its 200-day moving average, so the longer-term structure is not broken, but short-term momentum has weakened. Lower yields and a softer dollar can help emerging market risk appetite if they persist. The main headwinds are China exposure, global growth uncertainty, and sensitivity to US dollar liquidity. Bottom line, emerging markets look balanced but not yet strong. US equities are sideways overall, but volatility is high and the opportunity score is -1.0. SPY is still above its 200-day moving average, and QQQ remains in an uptrend, but recent weakness is concentrated in technology and AI-linked names. GOOG and NVDA are both oversold and below their 50-day moving averages, showing how leadership has become more fragile. Lower yields and AI demand remain supportive themes, but high volatility and negative 5-day momentum keep the market choppy. Bottom line, US equities are still supported longer term, but near-term leadership is under pressure. China equities are in a downtrend, with normal volatility and an opportunity score of negative 1.7. MCHI is nearly 10% below its 50-day moving average and more than 16% below its 200-day moving average, which keeps the trend structure weak. Normal volatility means the decline is not disorderly, and oversold positioning could create room for a rebound if sentiment improves. But policy uncertainty, currency pressure, and weak offshore China sentiment remain serious headwinds. Bottom line, China equities are oversold, but the downtrend still deserves caution. Crypto is the weakest area in today's market lens, with a downtrend, high volatility, and an opportunity score of negative 2.7. Bitcoin and Ethereum are both very oversold and far below their 50-day and 200-day moving averages. That can create room for sharp relief rallies, but it also signals an unstable risk regime. The main pressure points are ETF flows, dollar liquidity, and broader risk appetite, especially when equity volatility is elevated. Bottom line, crypto remains fragile, and any rebound should be viewed in the context of a high-risk downtrend.
Go beyond the highlights. Get the full Market Lens report in your inbox. Powerful AI-driven insights on global markets, critical news, risks, and opportunities to help protect and grow your money.